Hello there, my name is Aboutixon Wasaki. I am one of the principals at Inachee.com, and today I'm going to speak about how to invest so you could understand different investment options both for Uganda and globally. In today's presentation, in the first part, I'm going to tell you about Inachee. I'll briefly tell you about what drives our ethos. I will speak about the investing basics, the kind of philosophy you need to have to invest. I will then speak about how different Ugandan businesses rank against each other. This is an exciting part that I want you to see. And then we'll talk about the next steps. If you stick around for part 2, in part 2 I'll go into the more advanced areas. We'll speak about investing in shares globally, because if you are a Ugandan investor, even if you're doing Ugandan business, you want to cast your eye on the global landscape. And I'll speak about a fund, what is a fund, and I'll give you examples to speak about, and then we'll wrap it up. So in the basics, really about me, my name is Aboutixon Wasaki, like I said, and I'm a chartered accountant. That is what FCCA stands for in my name. Well, the first thing I have to tell you is hello. And for those of you who are from Uganda, I will have to add on other greetings. Olyotia, Agandi, Kodeo, Kopango, Habari for the Swahili speakers, Mulembe for you, the Bagisu, and Muraho. You know who you are, for whom that greeting applies. So I am a chartered accountant, and I've been one for about 17 years. And my experience includes about a 13 billion investment fund. I've audited a central bank, a large number of agriculture and sugar plantations, as well as tea. I've done a lot of manufacturing clients, World Bank, United Nations projects. I started off my career in Uganda with a global firm called PwC, or PricewaterhouseCoopers for the older ones of you. And I was in Uganda and then in the Bahamas until moving to a top 10 firm in the UK. My global experience spans over 25 countries where I have traveled and done business. And while at a university in Uganda, I did Bachelor of Commerce at Makerere University Business School. And previous to that, I was 6 years in high school called King's College Budo. Now about Inachee. Inachee is an ethical business advisory firm. We have offices in Kampala and London. One of the big things we do is Advanced Thinking, which is our newsletter, which has over 1,000 subscribers. And since 2012, we've been helping businesses at various stages. If you're a startup, we do things like business plans and feasibility studies. For your growing business, we handle things like management accounts, internal controls, strategy, non-executive directors, and turnaround management, that is if you're failing. And then investment advisory. This is especially for our diaspora clients who want to know, where do I put my money? Or for support for people like private equity firms and international investors, multinationals who want to get a market entry strategy into Uganda. So in terms of the investment basics, one of the first things you want to do before you invest in anything is to develop your philosophy to money. Now, my personal philosophy in another lifetime is that I am a lay preacher, and my personal philosophy is, what use is it to gain the whole world and lose your own soul? So I personally use money as a tool to do the other things for the calling that I have. What about you? What will be your philosophy? The second critical thing about investing is that you need to understand what your risk profile is. Now, your risk profile typically means, are you low risk, medium risk, or high risk? Now, if you're low risk, you want to play it safe. Most times this implies that your investment strategy will comprise of safe options. This means things like bonds, treasury bills, property, and cash under your bed. That is a safe option. The second thing, which is a medium strategy, is typically what you'll have is people invest in things like treasury bills, government bonds. Property is also still a medium risk, but then you mix it up to also have things like precious metals and then equities or shares. And then in a high risk strategy, typically what you'll have mainly here is equities and then alternative investments together with other things. The other basic that you must critically understand is what is called a benchmark. Now, a benchmark means, in essence, the risk-free rate, or the level below which you will not accept a reasonable return. Now, for example, if you were doing nothing in Uganda and you're putting all your money in something, the risk-free rate might be government bonds. So government bonds have a return of about 16%, as I will show you briefly later, which means if you did nothing, you could put your money there and get 16%. The other benchmark, if you were to think about it, might be for Ugandan shares. There's what they call the All Shares Index. There's a return on average that I think is about 61% that you can get from shares. So if you're putting anything, think of those as almost like your benchmarks. If you're doing business globally or you're investing globally, for example, in shares, if you're putting your money in American stocks, Apple, Google, Netflix, Facebook, you might think of what they call the S&P 500. The S&P 500 represents the 500 largest stocks in the US. And so that is really the investment basics. When you think of that, you then aim to build what they call a well-diversified strategy, where you, based on your risk, like I said, you will mix it up. So for example, if you're doing a low risk strategy, you might say, for example, I'll put 40% of my investments in equity, 35% in bonds, 5% in precious metals, and then the 20% in others. And what is appearing on your screen right now is an example of a diversified strategy. So what you could see, if I just take the middle column, which is the medium risk, you could see that in category A, you have equities. So for example, they're saying, totally you'll put 60% of your investments in equities, but even there you break it down. You might say UK equities, other developed countries, and then emerging market equities. And then in category B, you might say, I'm going to put 20% in bonds. Then again there you might choose government bonds, corporate bonds, or high yield bonds. And then category C, you might say, I'll put 3% in precious metals, and you might say, I'll put it in gold. And then in category D, you'll say others, maybe I'll put it in property and related, that's 3%, hedge funds or private equity, 4%, and then in others, and then in cash, I'll have it 10%. And thereby you get your total investment strategy, which is well diversified. So when you think of that strategy, let's think about Ugandan investments. Now, for many of you who are thinking of business, you're saying, but I am here for business advice. Think of a business like an investment. At the end of the day, you're putting your money in and you want a return. That is an investment. It's not any different from if you put your money in shares, in stocks, in bonds. So how do Ugandan investments perform? Now, over 7 years at Inachee.com, the /best sectors, we've profiled over 26 sectors over the various years that we have been doing business with Ugandan entrepreneurs. And how do these investments perform? What you see on your screen is an example of various categories. So the less performing ones, we have things like a taxi, 9%, cassava, 3%, our dance group, 15.97%. Now, the benchmark in this case is a 5-year government bond of 16.03%. So the rationale is this: if you must do anything, aim for at least 16.038%. Businesses like taxis don't seem to be generating that return. Are they worthwhile? I am not sure about that. Write to me and tell me about that. Then in the next category, you might have things like dairy, which is 23.92%, piggery, 34.6%, money lending, 40%, online classifieds, 59.88%. That's a good thing to consider right now in these days of online businesses. Then you have a large benchmark there, which is Ugandan shares, where they generate about 60.61%. So all those businesses, even money lending, shares in Uganda seem to do better than them. Then you have the next category like maize, 71.7%, pharmacy, 114%, property management, 166%, fast food, 294%. That is your chips and chaps. And then you have fruits and vegetables, 384%. And then you have the all-time best performing Ugandan investment, which is forestry, 476.19%. With all this information, what are your next steps going to be? Visit Inachee.com versus the best sectors to see the full list of all that we have profiled to date. If you want to consider investing, you need to likely develop a detailed investment plan. This might include a business plan, a feasibility study, a review of your current business, or a market entry strategy. You need to speak to an investment professional to assist you. Inachee.com has information about us and see if we can assist you. But remember the investment warning and disclaimer: Investments can go up or down. Past performance does not equal to future performance, and the information that we have provided was accurate at the time we provided it. If you want to have a full list of investment advisors, the Capital Markets Authority website can provide you with some information. If you want, you can head off right now, or you could stick around for part 2. Thank you.
And we danced, yeah, we used to dance, we jumped, and we sang, and we used to laugh. Everything.
Welcome to part 2. In this part, I'm going to speak about global shares, an overview. It's a bit more technical, but it's worthwhile, I promise. So the first thing, of course, you might wonder is, what is a publicly traded share? Now, a share is a slice of ownership in a company whose ownership is partially public. So if you think of big companies in the world, companies like Google, the last time I checked, for example, a Google share is about 1,133 pounds per share. Apple 335.8 shares, Procter & Gamble 100.67 pounds, Netflix 381 pounds, Jumia, the online supermarket, 16.6 pounds, Coca-Cola, that you might all love, 35.53 pounds. Now, all of this usually happens when you're doing trading on a country stock exchange. So if you've seen things like the FTSE, that's the UK's prime market. In the US, you have the Nasdaq, which is especially for technology stocks. And in Japan, you have the Nikkei. So those are examples of where you'll see information on shares. The second thing about investing in shares is typically you need to have an investment platform. This is where investors buy and sell shares. Now, in the UK, for example, you'll have a platform like Hargreaves Lansdown. I use that one myself. It's excellent. But you'll have other platforms: Barclays Smart Investor, Interactive Investors, AJ Bell. If you're in Uganda, there are a couple of options that might be available for you, but you might consider having to search very heavily because many of these platforms do not take Ugandan clients. But most of these platforms, the way they work is, if you want to buy shares, you'll typically have a bank account that you link to your dealing account, and typically every time you buy shares, there's a dealing charge. For example, Hargreaves Lansdown charges £11.95 per share. Then the other concept of shares and how you make money from shares is through what are called gains and losses. Typically what they have is an investor gains what are called capital gains, when in the long term you've purchased your shares and the price rises, and then you will sell. The difference between how much you bought them for and how much you sell them for is what is called capital gains. As an example, there's a little share I bought in a company called Teladoc. It's like telephone doctors. It made a gain of about 102% at the last time I checked, which you could see is a pretty good gain. But of course, I haven't told you about my losses. So shares, this is why they're generally high risk, because you could get a really large gain on a really large loss. The other thing about investing in shares, it's worth investing in finding a good stock advisor, because there are myriads of shares coming across all sorts of platforms in the world. So you might not fully know all the shares that are available. What you want to consider is advisors like, for example, you have the Motley Fool, Financial Times, Investor Chronicles, and all of these help you identify the best stocks to consider depending on your investment appetite. I have personally used the Motley Fool, as well as I've read the Financial Times to guide me, and that's who helped me to, for example, find the Teladoc share. Now, what you're seeing on the screen is an example of an app, a screenshot. You could see on the left hand side for me, which is probably your right hand side, you could see the big gains. You know, for example, a stock that is TDoc, that is Teladoc. At the time I invested in it, I had a gain of 104%. Another stock there, which is called Nvidia, this is artificial intelligence, I had a gain of 20%. But on the other side of it, you can see some massive losses that I had made. For example, Occidental Petroleum, which is in the energy sector, I had made a loss of over 52%. And then another one called Shockwave, that is an American medical company, I had made a loss of 35%. So you could see that in stocks, you either gain big or you lose big. So what I have for you here is an example of a gain or profit case that I've put for you to help you put this into perspective. So what you have here is, for example, you have Amazon at the top, which is in the retail sector. If you put in £18,000 in Amazon with a share price at the time of 2,365 per share, you'd be able to buy about 7.61 shares. Let's round that up to 8 shares. And then if you look at the last 6 months return of Amazon, Amazon has delivered about 64.2%. So if you use that and you extrapolate that Amazon is going to perform the same way for the next 6 months, the share price in 6 months will be about 3,884, which means that you'll have a gain of about 12,148. Now, the reason that is so critical is because the benchmark, like I mentioned, for Amazon is, in this case, the S&P 500, and the benchmark was delivering 6.36%. If you had put your money in the S&P 500 benchmark, you would have made only 1,144.8 pounds, which means the Amazon stock has delivered 11,004 pounds, much more than the benchmark. And that is the same principle for the others that I've put there on the screen: Apple, Nvidia, Square. Square does financial services, it's doing cashless payments. Beyond Meat is alternative plant-based burgers. AstraZeneca are a healthcare provider. I think they're the ones who do things like Panadol. If that was your portfolio, for example, and you've invested £60,000, over the last 6 months, your average return is 39.58, and you'd have made a gain of about £27,896. If the same benchmark of 6.36 is used, you'd have only made a gain of 3,816 from the benchmark, which means you'd have over 24,000 if you invested in that portfolio, over and above the benchmark. Now, let's talk about global funds. So global funds are almost similar to shares, the difference being that it's a pooling vehicle. If you're in Uganda, you would have heard of things like cooperatives or SACCOs. What in essence a fund is that you as an investor, you pool your money together, and then you have the investment manager who invests it for you in a portfolio of various things. The advantage is that the amounts that you need to invest in a fund are much smaller than if you're buying shares. So for example, if you couldn't afford an Amazon stock on your own, with a fund, if you're investing with a manager, they might only require 100 a month as a 100 as a minimum investment, or 25 a month if you're investing regularly, and they'll pool your money together with other investors, and then they'll be able to invest in a number of things. So investing via a fund is much cheaper because, for example, if you invest in a fund, a platform like Hargreaves Lansdowne does not charge you for investing via a fund, whereas they'll charge you about $11.95 per share that you invest in. So that is the big advantage with investing in funds. Now, funds typically, when they invest, they have what they call a known objective. What is their aim? So there's an example of a fund called the Franklin UK Mid Cap. Its objective is to grow in value by more than the FTSE 250X Investment Trust Index. They do this through a combination of income and investment growth over 3 to 5 year period after all fees and costs are deducted. So that is their investment objective. And when you know that objective, that is how you can measure them and see whether they have achieved that objective or not, if in this case they have exceeded the benchmark. So for example, this same fund, the Franklin UK Mid Cap Fund, I think in 2019, they achieved 42.3% performance, whereas their benchmark, which was the FTSE 250 that I've mentioned, was 30.79%. So in this case, they exceeded the benchmark, and that was pretty good. Most of these funds, you can find information about them online. So most platforms will have all the information, like key documents, the financial statements, and a number of things to review the performance. Now, funds give the advantage of helping you diversify, where shares will not necessarily help you, because shares, if you hold just one stock, you're not diversified. But with funds, automatically you are diversified. So I can give you another example of a fund screenshot. Here is again an example of a fund. In this case, this fund that you're seeing is the Legal and General US Index. The next to it there towards the left shows its performance. So that is a screenshot which shows its performance, so you can be able to see its performance there over the last couple of years. And then again, you can see that it is well diversified. It shows you its top 10 sectors, and then it also shows you its top 10 holdings, and that is how you generally know that a fund is diversified. Now, similar to shares, I can give you an example of how you could make some money from funds. Here is an example of a screenshot of funds and how you can make a gain. So in this case, for example, you have the Legal and General US Index. Their focus is US stocks. If you put £15,000 in this, its share price on the 28th of July 2020 was 6.557. You would get about 2,287 units. If you round those up, that's the same amount. It has delivered about 5.88% over the last 6 months. If you extrapolate that, just like we did for the shares, you'd get 2,422 units after 6 months. It's a gain of 1.35. If the benchmark in this case is delivering 8.14%, you'll find that the return from the benchmark actually is higher, is 1,221, and therefore your excess over the benchmark is a negative 1,086. And that is the same concept if you are building up a portfolio of various funds. In this example that I'm having, your 60,000 that you invest in various funds, over 6 months you'd have a 17.19% return, and you'd make a gain of 10,868, but your benchmark will have delivered 22.38%. It would have returned 13,429, which means in this particular example, you are trailing the benchmark by £2,562. So in this example, it means investing in a fund might not be such a good idea when you consider the benchmark with this portfolio that has been built up. So I've talked through a lot of things, but if you were to take this forward, what would your next steps be? The first thing is you want to consider the choices of how you invest. If you are a sophisticated investor, you can do this investment yourself. You could consider an investment advisor. You could consider a friend. You will likely need to have a broker or an app to help you, suitable to your country, as I explained to you. A big issue when you're opening an account is that you'll need to provide what they call KYC, or CDD documents. This is typically a proof of your address, proof of your identity, and in many cases like Uganda, they'll want to know your source of funds or your source of wealth. And so before you invest internationally, you have to bear this in mind quite critically. Another thing about when you're building your portfolio for funds and shares is you probably want to develop a profit and loss forecast so that you can know what your estimated return on investment is. Now that's because you need to factor in all other costs like dealing charges so that you can gain a good picture of your total return. You might need to speak to a professional to assist you. You could visit us at Inachee.com to see if we may be able to assist you. And the warnings and disclaimers that I gave in part 1 apply. Investments can go up or down, and past performance does not equal to future performance, and the information we've provided was accurate at the time that we provided. You might want to consider the investment advisor list on the Capital Markets Authority website if you're based in Uganda. If you're based abroad, you might find, for example, in the UK, you need to look at the FCCA regulated investment advisors. I hope this video has helped you. Write to us and tell us about your own investment strategies. Email us and visit Inachee.com. Thank you for listening.
And we danced, yeah, we used to dance, we jump, and we sang, and we used to laugh. Everything now is changing fast. To make it last, you gotta hold on to the